All right, welcome to Momentum Monday. Today is August 18th.
What up, Ivan?
What's going on, Howard? Seems you have a lot of 10.
A lot of what?
A lot of 10. Like, did you use some spray 10 or anything?
No, I'm in San Diego. I was at volleyballing without my shirt. People thought I was you. I've taken two F-45 classes.
Good. Did you like it?
I can't move. I'm a little sore. A lot of squats.
Did you get any phone numbers?
Yeah, I did.
Okay.
People just throw phone numbers at me. Men, women, children. Hey, hand-delivered mail like our king. Hey, so let's get right into it.
All right, let me share my screen. And let's see, share screen.
You're well prepared.
Yes, 1 second. All right, now you should be able to see my screen. And do you see my charts?
I do.
All right, so this is the chart of the S&P 500. As you can see, we're still in a range. I think 280 is a support. It coincides with the 200-day, and 290 to 295 is resistance. And until the S&P can close above the 295, we remain in a range-bound market. I think if we lose 280, we can easily drop to 260. Large caps are holding a lot better than small caps. The small cap index is the big concern for many people, but just because it's been definitely underperforming, just because there's so many energy and banks there, so they're weighing it down.
Yeah, I mean that's just the way indexes work. Where's J.P. Morgan? I mean, let's take a look at the banks.
The banks just one big nothing, as you can see, for the past, I don't know, more than a year.
I think it's about 2 years. Yeah,
Okay,
over 2 years. Going on 2 years. So no money to be made there. It's all still tech, biotech, and as much as there's been negative headlines, I got to say the market's held in there pretty good.
Yeah, definitely, relatively. I mean, especially with the big spike in bonds and therefore a drop in yields. I mean, we continue to see negative interest rates.
Well, what happens is everybody's talking about it, and the markets, be honest with you, it's fun to be negative, but the markets have digested a lot of craziness. A lot of the international markets are weak. You've got gold spiking, you got yields plummeting, so bonds are spiking, and the index, 4% off all-time highs? Not bad. Not bad. Now, there is all the, I was saying, there's talk of the recession, but this would be the most widely predicted recession of all time. Plus, we're in a recession. If you're in the energy industry, you've been destroyed. If you are in the commodities business, it's been horrific for 6 years. And if you're in retail, Sam's, Walmart, Home Depot, Amazon, it's been brutal. So those are some pretty big industries for America.
Actually, Walmart is doing well. I mean, it's near all-time highs.
Sam's, AutoZone, Walmart, Home Depot, Costco, retail's a disaster. Walmart, I think it's all-time highs weekly.
Yeah, it is, yeah. Mm-hmm.
Pretty much all-time highs. So you still have the large caps from restaurants, a lot of the same names that we've talked about. Ivan, let's talk about what's new. So I think the key point is the market's held up pretty well for all the negative news.
Yeah, you can say so. And there's still a good number of stocks that are holding above their 50-day, even above their 20-day moving average. So they're building new bases, consolidating.
While the restaurants like Shake Shack, I missed that one, Shake Shack.
Oh,
I'll
Shake
touch
Shack,
on
a
that.
tremendous move after their earnings report.
I never saw that coming.
I assume
Never
it
saw
was
that.
just a big short squeeze because there were so many short sellers. Look at this, 4 days of short interest. So and relatively very tiny float, only 28 million shares, and those tiny floaters, they can move. When they move a lot.
The IPO's been around almost 4 years. The company's been public 3-4 years now.
Oh yeah, exactly. Look at this.
Incredible. Never saw that coming. Don't like the product, but they're opening everywhere. They're every airport. So, there's many ways to skin a cat. That was a great one. Chipotle has been a great one.
Starbucks.
Yeah, Starbucks and McDonald's, the big restaurants have done well. But I guess Shake Shack in New York, I'm sure you can get it delivered. Again, this goes to that whole thing. You don't have to build out your infrastructure, right? Like you got Postmates, Uber
Yep.
delivering food. And if we go back and look at Domino's, owns that all themselves, and their stock's been the underperformer because they haven't benefited from the. They've actually been the ones competed against by the Ubers, Postmates, DoorDashes, right? Because Domino's has their own delivery, so now
Exactly, yeah.
everybody else is a competitor. So you can see how, and that may go on for a while. But even Domino's has held in there pretty well. Considering the run ahead, flashback to a monthly of Domino's. What a great 10 years they had.
Exactly, but that 230 level is important. If they don't hold here, they can easily drop to 200.
The one that's interesting is all these sodas that have caught on. But if you look at Fizz, the tough industry though. Like I remember when that was all the rage, and now there's just so much competition. All right, so let's go to what's working. Let's go to our social leverage 50 list. We'll go through a few names. We have 50 stocks. We go through them every week. It's on Market Wisdom. I think the ones that stand out to me, Ivan, PAGS, which I've owned, it really had a great.
Yeah, another big earnings report, and they gapped up at all-time highs, and I think the pullback towards 50 or 49 will most likely be buying.
Look at the earnings expectations just really exploded.
Yeah.
So Latin America e-commerce. We talked about the three stocks. Meli and PAGS are the leaders.
Considering that Argentina basically were blown up last Monday, I mean, their market went down.
Well, remember, Argentina may have blown up, but
50%.
But the commerce providers still have to do, the people that are doing like PAGS, although they're not big in Argentina, if at all. I think there's probably an opportunity in Meli here for people that can deal with some volatility. I don't own it, but I'm stocking it. Okay, what on the list? The other one that I thought was interesting that I follow but don't own is Q2, which is kind of a banking layer middleware for banking. Broke out and just hasn't looked back. So these are the ones that are going to lead if the market keeps running, because they just never slow down. I mean, this is not a cheap stock, but again, cloud-based virtual banking software, and you can see, fintech exploding and hundreds of non-bank banks. Q2 is providing ammunition to all these guys. It's been on the list. Let's go see what's been on the list. Is Q2 new to the list, Ivan?
No, it will be the 10th week this week.
Yeah. So new to the list, Edwards Lifesciences and Lattice Semiconductor. So that's interesting. So semis are still showing up on the list.
Yep. This one had a recent breakout all-time highs, and it has consolidated. It's holding its earnings gap. It's holding its 20-day.
Yeah,
and,
I would say I'm long TER. We've talked about it, but that same kind of thing, holding its gap, higher price stock. So not bad considering all the negative. And you can see they're expected to earn 3. Now these are always cyclical and look great right at the top, but that's one that I'm long. Another stock that held up well that I'm long is INSP, which is a boring sleep stock. And where to close? 65. So it hasn't made a move yet. Not a huge volume company. and still an early stage kind of spec medical company, but in the sleep apnea
Very
space.
small float, only 12 million shares. So this one will move a lot.
That one. Yeah. Anything that looks interesting to you, Ivan, that stands out on the list?
Yeah, sure. I mean, last week I think I shared a bunch of names. This one is setting up near its, I think that's all-time highs, but let me double check. Yeah.
You got shaken out of that.
Yes,
I think maybe
I got shaken out for a swing, but we also traded those GH holding its earnings gap and its 20-day match, the same setup, pulled back to its 20-day and it bounced, and then AVLR, again very similar setup, big earnings gap, pulling back to the 20-day and then kind of trying to bounce from there.
So software still leading. Where's IGV? The bounce, man. I tell you what, there's just so many people that have been out of this market on this last 2 weeks of recession. Okay, so software's still kind of lagging here.
It looks the same as the S&P at this point.
Yeah, it's interesting.
Yeah.
Yeah, so I don't have anything special from this week. I think people still got to choose their spots. Coming up on the end of summer.
I think it will be very interesting if the long term, the bonds in general, pull back. Because if they pull back, all of a sudden we might see a fear of missing out, because there's so many people that are in bonds, they're in defensive stocks. I mean, utilities, they've been probably the best performing sector for the past year on the S&P. So if we see that pullback if we see the yields rallying, we might see more money coming into stocks. But of course, I think a lot will be connected to China, and if there's any development there, I think at this point the market should be kind of probably has already discounted it.
Yeah, the banks would start rallying on that news. There's a lot of fuel here. Listen, there's been, headline wise, people are worn down. End of summer, back to school, kind of moody, kind of negative. Wouldn't take much to get this market squeezed higher. I'm glad I'm not short. Kind of got a lot of cash. I have a good list of stocks from our Momentum 50.
Some of the Chinese name has actually started to bounce. I mean, there's still a big mess. There's, for example, JD.
Yeah, but remember, it's in everybody's interest. The tariff thing was stupid. Everybody knows it. He's never going to admit it. He had dinner with Tim. Let's pull up a chart of Apple. This is what really could sneak up. You never can trust anything he says. Whoever's in the last, he had dinner with Cook. What I had heard was Tim Apple saying that if he keeps this up, Samsung, I think Apple's not stupid. He's gonna play the Samsung card and say, Trump is helping Samsung, Mr. Mega. He's just not sophisticated enough. He's got a great economy behind him. He can't negotiate his way out of a hat. These American companies that he needs Apple. For the S&P to go up, he needs Apple. He needs Google. He doesn't understand the way these markets are weighted now that he needs Apple to go higher. It sure did help him that Walmart broke out. That kind of surprised me. But in the end, for the markets to go higher or hold, he's got to have the help of the FANG stocks. So he can't just constantly be aware. I think Apple's setting up for a sneaky move on any positive news. It just feels like a good setup there. There's so much, negative China news baked into the market. But again, no reason to slow mover. There'll be a lot of the semiconductors would be primed to rip higher, and you can see, with Teradyne and Lattice setting up as well. So there's a lot of fuel underneath. That's the way I'm seeing it. I'm really glad that I've kind of been cautious for a couple of weeks, but I think a lot of people are really leaning short. And of course, we can fall apart from here. But come September, a lot of money is going to come off the sideline when people see that the S&P is still up 15% on the year. So hope that helps. Ivan, have a great week.
You too, Howard.